Hey guys, what's up and welcome to a new Tesla update video. So today as usual, let's talk about the market, which is about to close in just under 3 minutes. Let's talk about obviously the market itself, Tesla, where we're going to go from here. The CPI came in essentially within expectations, or pretty much at expectations. And tomorrow, I believe tomorrow we get PPI, which is also, fairly important, honestly, which can also determine, quite a few things. But for the most part, the market's pretty happy today because, CPI came in as expected. So Tesla pretty much going to be closing the day almost up 5%, which is a pretty nice move from these lows over here that we had recently just the other day. Closing out going to be around $183 per share compared to the market. Tesla performing, in line, arguably slightly outperforming as well. You can definitely make that argument. So overall, a pretty nice day for the bulls to get a bit of, breather room, if you will, over here. But as usual, let's just talk about it. If you enjoy the video, by the way, as usual, guys, please don't forget to hit that like button. It does help a lot. And as usual, this is not financial advice. I'm not a financial advisor. Make your decisions, do your own research, all that good stuff. But yeah, so far we're pretty much playing out more or less exactly what we said yesterday, right? We did talk about how, there's a chance that we come down a tiny bit early in the morning. But then ultimately I said how I personally believe that this is going to be a bounce all the way up to somewhere around, almost 190, we'll say, give or take a few points. And we did get pretty close to it. We did get up to a 183, right? Now, I do believe that we will still go higher. I actually don't think this is it. I do think the bounce will continue. And I think the bounce will take probably the rest of the week, at least, in my opinion. That's just my guess, though. Again, whenever I give you guys any sort of time frame, that is like 99% just pure speculation, because time frame is the one factor, in my opinion, that is the most difficult, if not impossible, to predict. It's more about the trend, I guess, that's more important to understand, or potentially have an idea as to where we'll go, not necessarily when we'll get there, just more of where, which is why I don't like buying options. I prefer selling options, but that's a whole nother topic. But nonetheless, so yeah, let's talk about it. So you can make an argument that on the 1 hour chart we did break out for Tesla, at least out of this little kind of small downward trend we had for the past, I don't know, whatever this has been now, probably like week and a half or whatever it's been since these 210s right over here, maybe even 2 weeks or something like that, right? So you can definitely make the argument that we did break out today, and that is also why I believe that we will go a bit higher. And I do think that we still have a decent amount of room going up to a $190 per share, to which I will exit some of my sold puts. I was thinking of exiting them today, but it wasn't down. Like the value of the contracts didn't fall enough for me to want to exit yet. It's 50%, which is not too bad, but I think it could be a lot better than that. I really think I can get up to at least 70 to 80% minimum. As the VIX potentially gets crushed a little bit more, which I do think the VIX will make another low over here, potentially all the way down to like 20, almost even, which is exactly why, which will give room for Tesla and the market to make its leg up even higher, which I still think Tesla will do. So all that being said, right, as you can see, we definitely broke out of this little downward trend, right? I definitely think that there is still a possibility. I want to make it very clear. There is a possibility we come down to retest this breakout one more time, which will pretty much put us at like 175, 174. Based on how today's closure looks like, I don't think it'll happen, but it's not something you want to completely eliminate. So if you do see a red day, as long as we don't re-enter this, downward, channel, if you will, again, as long as we stay out of it and essentially just come down and, let's say bounce off of it like this, right? Very important. That's not too bad, and that's nothing to really worry about. If anything, it could be an opportunity to add some, small, long swings. But, of course, that's just my opinion. It could be completely wrong. Make your own decisions as usual. But yeah, that's kind of the main thing I'm looking at. But regardless, I do believe that we will go a little bit higher, right? So so far we've done something like this. I do think we will go something up here as well, and we will make that little kind of move to the top. Which again, the main reason I believe we'll go there is pretty much, retesting the breakdown from this congestion period. Because again, if we take away the drawings for now, right, this congestion period, you can argue, has been acting as like a ping pong, sideways channel, from about 213, 214, right, ish, all the way down to as low as, somewhere around this. Pretty much, we'll just say, to make it simple, 190, right? Give or take a couple points, of course, but we'll make it simple and say 190, right? We've kind of been ping ponging between those areas more or less in that channel. So usually when you have a break out of an area, whether it's to the downside or to the upside, it's very common to get a retest. And I believe that this bounce right here is not only going to be a retest of that breakout, or I guess in this case breakdown, but it will also actually be potentially a bear flag setting up. So that's something else to absolutely be considering. Now, so far it's looking like a bit of a wonky bear flag, which is why I wouldn't be surprised if there's an actual move to the downside a little bit to retest here. And and essentially we go from here, go like this, and go like this, right? And then this would essentially just this would essentially just create a bear flag like this, right? That's kind of what I'm personally envisioning right now, and I personally think is going to happen. But again, regardless of whether it's a bear flag, whether it's just a simple retest of the prior breakdown, which again is around that 190, regardless of how the market decides to potentially come up there and retest it, I do believe it will get retested, and I do believe that we will still go a little bit higher than this, and there's still more room to the upside. It's just a matter of how are we going to get there. We're just going to go straight up there potentially in just a casual, just a classic retest. Are we going to do it in a bear flag fashion, or what's the deal there, right? Because again, if we do it in a bear flag fashion, then you can make the argument that this is the pole and this is the flag, and then it's pretty crystal clear, and it's also quite a textbook bear flag as well, which I think once that breaks down, assuming that does break down, let me draw that back again quickly, right? Assuming this does break down, right? So let's say we have the pole, right? We have the bear flag right here. And let's say, let's just in theory pretend that it plays out exactly like this, just to make it, for demonstrational purposes, right? Usually the way you determine where it'll go is, let me finish this bear flag actually, right? Is once it breaks down, so let's say this is where we break down and the bear flag gets confirmed right here, right? Usually what you do is you take this pole and you measure it. You measure it back down. So let me just remove this line here and let me do it like this instead. Again, this is just for rough demonstrational purposes, right? It's not picture perfect, but just a rough example, right? And then from the part where you break down, you take the pole and you measure the distance to the downside, and that gives you a rough idea as to where we'll go. And you can see it pretty much leads us right into that 150, 145-ish area that we've been talking about for quite a while now, right? Which is my ultimate price target in this bullish correction. I do want to make it very clear. I do believe this is a bullish correction for Tesla. We'll see. A lot of people are still kind of bearish on the market and thinking it's going to fall to like some substantial lows, which again, it is very possible. It is absolutely a possibility. But as it stands right now, Tesla, because it broke 200, still looks to me that it has regained for the medium term. So very short term, it looks bearish. Medium term, it actually looks bullish. Long term, it's still technically bearish. Let me explain why I say that, right? So short term is bearish because we broke down out of the sideways channel. It has confirmed the breakdown. Now we're essentially just doing a dead cat bounce more or less to make things simple. And then I think from here we go even lower. Short term, bearish. Medium term, bullish. Why? Simply because we did break above this arguable lower high swing, or swing high. Man, these terms always are so confusing to me. I don't know why. Swing lower high, my goodness, swing lower high, right? Where, essentially if we break above this, then you can argue the fact that we did now set a higher high, which is a great thing. And then of course, this move to the downside, which is essentially a correction from this run up, will potentially, hopefully set a higher low, which again will be around that 145-ish, give or take 150, something like that, give or take, right? Which would be good. That'll be fantastic. And I think that will be quite bullish for Tesla. The gap will fill and everything like that. And, I think we'll be good to go. I really do. But that's assuming that area, of course, holds, right? And that's why I think medium term, because that's more of a medium term trend, is bullish, mainly because we did break above this high over here, which is good so far. Of course, we still need confirmation, like I said, to set in a higher low, but that's that. And now I said long term, we are still technically bearish because, well, we still have this overall huge downtrend that we are still technically in. And until these red lines, at the very least, this first red line over here gets broken, technically the long term is bearish still, right? So that's just the way I am personally viewing it as of right now, right? So again, short-term bearish, medium-term bullish, long-term still technically bearish, but very long-term, like years out, bullish. That's more in fundamentals, because I think long-term, like if you start talking about years out, that's when chart analysis to me doesn't make as much sense as just straight fundamentals. Fundamentals is always what triumphs long-term, like long-term, like years, not several months, years, right? So that's the way I personally look at it, and that's the way I personally view it. But that's more or less what I'm seeing, guys. So again, if in case you're wondering why I'm thinking it's going to come down all the way here, other than what I just explained, on top of that, we of course still have the Fibonacci retracement, which will bring us, of course, down to the 140, to the 618 level, which is the 146 level price range as well. And again, in order to discuss or to figure out why I believe we will come down up to the 190, on top of also, of course, being a retest of the recent breakdown that I talked about, I also do believe that ultimately it is going to be a simple, Fibonacci retracement level, which is of course going to be the 0.5, which is a very common level to retrace to. But if we break above 0.5 and we go up to 0.618, that's when the bears start losing a little bit of grip. So the bears are absolutely going to want to defend this 190 level ish. So that's gonna be very important for the bears. So we'll see what happens, guys. We'll see where that leads us. But that's essentially what I am seeing as of right now. Let me know what you're thinking down below. Thank you all so much for watching, and I'll see you guys tomorrow. Peace.